Damn. It's called discipline. Look how big. Oh my gosh. Let me stop. Discipline is key. Discipline is key inside and outside of trading. All right. Make sure you're working out. Make sure that you are doing things outside of trading that is constantly building your life. All right. You need to build your life outside of trading as well. And then you'll start seeing results in the charts as well. Welcome back to another video, traders. I got a good video here for you guys. I'm going to be breaking down some of the trades that I've taken this week. I'm mainly going to be breaking down the trades that I've taken on futures in this last week. Let's get straight into it. I'm going to cover indices. I'm going to cover NAS, ES, and US 30, the trades that I've taken this week and what I was looking for, and just break it down for you guys and why I was taking those trades. Follow me on Instagram, guys. I'm gonna leave it somewhere here on the video. Go ahead and follow me there so you can get live updates of when I'm going live on YouTube. If you guys want to join me on YouTube and see what I'm trading and everything like that, and you'll just get updates in general. Join the Discord as well. You can get updates there too. All right, guys, so I'm going to use the replay feature here, and we're going to go back. This is the first trade that we're going to cover in this video. It's going to be on US 30 here, and it's going to be here on Thursday, the 8th of May. And basically, just to kind of give you guys an overview of what we were looking for here, guys, just look how this market is right now, right? So the main thing that I've noticed in this market, you can see we have the 43,000 level right here. The market bounced off this 43,000 and we, went down. We know what happened. It wasn't just a crash, right? This wasn't just a regular crash. Look at what we have down here. Look at all this liquidity that we have to the left, right? This seems like a sweep of all these lows right here. So seeing that was a major liquidity sweep, and the market has been rallying ever since. I've been bullish on this market. I'm not gonna lie to you, especially going into this trade. What do you see? As the market is going higher, what are we doing? You see that we have a sweep of these lows, we push to the upside. Now, this is some equal lows here that I was expecting the market to come down. I was really hoping the market would have came down and took out these lows during FOMC. I was thinking that was going to give us that major push to the downside that would raid all of these lows and just getting back into this manipulation overall, but that didn't happen. And since that didn't happen, that just further expressed to me how bullish this market was. So coming into this market open here, the first thing I noticed on this was we had imbalance, right? Some people know this as a fair value gap. Some people know this as imbalance. Some people call it inefficiency. It's all the same thing, guys. It all means the same thing. Next day when I woke up ready to trade, you can see this market just pushed towards the upside for the rest of the day. We actually took out Asian highs right here, and we left London highs right here. So that was going to be the target of the day. This was the liquidity high of the day that we were targeting. You can see this is a 15-minute imbalance and is also a 30-minute imbalance. Now, I executed this trade based off the 15-minute, and simply what I was looking for as the market was coming lower right here, and we're just going to play this through. Let's play this as 3 minutes, make it go a little faster. So as the market was coming lower, I was looking for us to tap into this imbalance. Now you can see the market did not tap into that imbalance. We still didn't take out the lows right here. I'm gonna just draw it out even better for you guys. Boom, here you go. You can see the market still did not tap this imbalance. So basically we're just waiting for the market to get into that imbalance. And I was looking for a rejection off of that area to take this higher. And you can kind of see the market was playing around for a little bit. And then you guys can see we have that first rejection right here. After this first rejection right here, guys, you can see this is where this market piqued my interest, that my alert went off. I was waiting for us to actually see a bullish candle closure. So let's play this forward. So after we got this bullish candle closure, guys, towards the upside, I executed my entry, right? Entry was right here after we got this closure candle. So boom, once that candle closed, stop loss went to the low of this whole closure right here. Stop loss at the low, boom, and target was a 1 to 2. All right. With this strategy, guys, I'm only targeting 1 to 2. So I'm able to lose 2 trades in a day. I'm risking 1% per trade. So I'm able to lose 2% every day, and I'm only targeting 2%. So if I win for that day, let's say this first trade right here, the first trade that I take, if I win that trade, I'm done trading for the day, right? If I lose that first trade, then I will wait. If the market creates another setup, then I would take the next trade. All right. But the thing is, usually I'm only taking one trade a day, even if I lose, because for the market to create these gaps, it takes a lot of money. So usually most of the time, I'm really only taking one loss every day, unless I was just completely wrong on my directional bias and the market really wanted to go another way. If that happens, which it has happened before, where I lost and then I took the next trade and the next trade made up for that loss. We executed the trade right here, and I'm gonna let this just play out. Now, as you guys can see, this market just kind of just exploded towards the upside, guys, like right here. That's the main thing that I really kind of notice at these times is the market. Once you find the directional bias of these markets, especially when it comes to indices and it comes to futures, once you find that directional bias of the day, right, the market will usually explode to your take profit if you're part of the correct directional bias. And understand, I only trade like this on futures, okay? I don't trade like this on the Forex pairs. I'm not expecting very huge moves like this on those Forex pairs. Basically, what I've done here is I've split myself into two traders, all right? When I first started trading, I was trading Forex. I still trade Forex now. I have already created a profitable strategy for Forex, right? That strategy is more of an intraday strategy. That's more of a long-term strategy. The next trade that we're going to cover here is on S&P 500, known as ES. Now, this trade here was a lot more aggressive. I won't lie to you guys. Remember what I told you, these markets here are bullish. They're showing bullish patterns, right? We are manipulating lows and we are pushing towards the upside. As you can see here as well, we are manipulating lows and we are pushing towards the upside. You can see that happened again right here. Now, this is FOMC. You can see for ES, or known as XPX, we actually took out these lows, and I showed you earlier where on US 30 we did not do that, right? So ES was a lot more bullish for me. So that goes to explain this entry right here and why we took this aggressive trade. Now you can see we pushed right after we swept those lows, we pushed, and look what we did again, guys. We are mitigating imbalances right here and we're pushing higher. We are taking out liquidity and we are pushing higher. This is a trade right here, right? So this is on the 8th. We actually took US 30 on the 8th, and you can see that XPX gave the exact same trade on the 8th. My directional bias was to take buys. My directional bias was bullish. So as soon as I seen the first gap, you're gonna see it here. No, I know what you guys are thinking. We have liquidity down here. Guys, I don't know what these gurus and everyone tells you. The market doesn't always have to come for liquidity. The market doesn't always need liquidity. There's already enough liquidity in this market. Look how much times we've swept liquidity. How much more liquidity do we need, right? As soon as this market opened, we got our fair value gap. Remember, we're looking for at least a 5-minute fair value gap after market open inside of our direction. Look what happens. We got one push. We got another push. And I believe the market closes right here. I believe this candle closes right here. Let's see. Boom. Candle closes, right? So as soon as this happened, I'm already looking for buys. First thing I was looking for, and let me delete this right here so you guys can see this a little bit clearly. Here's our gap. Here's the 9:30 open right here. Here's the next candle, and here's the next candle, and here's our next candle right here. So we're about 15 minutes into our trading session, right? We have a 5-minute fair value gap right here, which is what I want to see. So we have a 5-minute fair value gap / imbalance / inefficiency. Next thing I was looking for here is for this market to come down and reject off of the fair value gap. Now, what I was seeing here was the market did not want to come down into this fair value gap. Let me show you guys this, right? I'm gonna play this a little bit more. You can see we kind of wigged down. And I believe the market, yep, we wigged down here and the market just closed, right? This candle closed and I seen another bullish candle. So I took an aggressive entry at this high right here. So I was willing to take a trade right here covering the fair value gap. The reason why is because if this market would to invalidate this fair value gap, I know that we were coming for these lows and I would have been okay with that loss. This was a loss that I already told myself that, okay, if the market comes down here and invalidates this fair value gap, we're gonna lose this trade. right? And I was okay with that because I know there's liquidity down here that the market wanted to come to, but my directional bias was just so strong on this that the market was going to go higher and that we were going to target this 4-hour imbalance. I was okay with placing this aggressive trade. Okay, we had our entry right there and we're going to target a 1 to 2. You guys can see how the market is just taking off and never came back for our 5-minute gap. All right, so seeing that the market created this gap, I was able to place my stop loss underneath that gap just in case we wanted to come back and fill that. And if we invalidated that, I knew we were going to go for this liquidity. But the market was just so bullish. The market was just so much ready to go towards the upside. We never even thought about coming down for this liquidity or filling this gap. So if I was sitting here worried about the market coming down for this gap, I would have missed this easy bullish trade towards the upside. Every single day, I'm looking at NAS, I'm looking at ES, and I'm looking at US 30. Okay, I'm looking at all three to see which one has the best setup for that day. On this day, US 30 had the best setup for this day, right? Today, on this day, what you can see here, and I'm gonna go down to the 15-minute time frame. What you can see here is on this day, we swept these lows, right? You can see we swept Asian lows right here. We swept Asian lows and we have a push towards the upside. Okay, so since I seen that we already took out Asian lows and we have a push to the upside, the next thing I'm gonna show you guys is the fair value gap, right? Let's go and look at the directional bias. Why am I looking for buys at this market, at this area? Well, you guys can see the market is pushing higher, and we come back and we fill this entire impulsive movement. We didn't fill the entire gap. We didn't come down to the exact pip, but you can see we filled majority of this area of imbalance. Now, once I seen that, my idea was thinking, hey, this market just coming down here and filling this gap, we can at least get a simple reaction towards the upside to take out at least this high right here. That's exactly what I was thinking. Understand, guys, we're day trading here. I do not need this market to take off and make this high for me to get my 1 to 2. That's another important thing as well, guys, and why I'm able to take these aggressive entries and able to get in and out of the markets. My target, right? I'm only targeting 1 to 2. I don't need the market to take off and skyrocket into the moon. All right, I just need a simple reaction and a simple trade towards the upside. So here, another reason why we're looking for trades here is because look what happened, guys. Boom, we have a fair value gap right here. This is a 30-minute fair value gap. 30-minute fair value gap right here. You can see the market comes down. This candle here is the open. So let me go down to the 5-minute time frame. This candle here is the open. So as soon as we came into this 30-minute fair value gap here, I was looking for another push towards the upside. I was looking for another gap towards the upside that was going to give me the entry on this trade. So I'm gonna let this market play out. What do you see? Look at this huge impulsive movement towards the upside, right? Keep letting this market play out. Boom. There goes the gap. There goes the gap, guys. There goes the gap right there. So we have 5-minute candle here, 5-minute candle here, and 5-minute candle. This here is the gap. Boom. That's your fair value gap right there. And now all I'm waiting for is rejections off of it. So as soon as the market rejects, right? And you can also see we have another fair value gap down here as well. And I'm gonna talk about that too, because that's important. So we have two fair value gaps here. We have a 5-minute here and we have a 5-minute here. As soon as the market rejected off this area, you see we continue lower, we reject, we're rejecting, we're still rejecting, we go higher, boom, right here. As soon as we broke this high, I took my entry. Right there, right? My stop loss went underneath both gaps. So my stop loss went underneath this gap and that gap, ensuring that if the market really wanted to continue lower, we would have to invalidate both of these gaps. I was confident into taking this bullish trade towards the upside based on those confluences. And my target was above these highs right here for my 1 to 2, which is about right there. As I was in this trade, guys, you can see the market is kind of pushing towards the downside. I thought this was going to be a losing trade. I was ready to accept my loss for the day. But you guys know we need to follow our trading plan. We need to follow our rules. So once you have that stop loss set, you have your entry set, that's it. Do not touch the trade anymore. You've already put out the plan on the markets. Let the plan play out, right? Let the market do its thing. If the market's going to go higher, it's going to go higher. If it's going to go lower, it's going to go lower. So that's just basically the mindset that we were in on this day. And you can see the market is playing out. We came back, we mitigated those areas again, and now we are pushing higher. These highs right here was the closest area of liquidity that I wanted to see the market come into. And then of course, you see we have these highs up here as well. Look at that explosion, guys. Every trade that I've showed you guys so far, you can see how the market is exploding off of these mitigations of these imbalances. Now, I haven't officially put this strategy out yet. I'm going to exclusively put that out to the Discord. Join the Discord here. That's going to be the first place where it's going first once I finalize the strategy and everything like that, and I create the exact rule sets and the checklist. Right now, this is just me trading it personally. Now, the next trade we're going to cover is the next day on US 30. So I'm just going to let this play forward a little bit. We're going to zoom this out. Okay. Let me go back a little bit more. We're just gonna go right here to market open. Boom, right here. You guys can already see, right? You guys can already see, guys, it's the same thing that I'm looking for every single time, guys. Look at this. We have the imbalance right here. We swept Asian lows right here. And we left equal highs. Now, this trade right here was just a freebie, right? This was just the market giving out free money. We left equal highs right here. We came lower. As soon as the market opened, we came lower. We swept Asian lows like we did last day, right? The day previous, we did the same thing. We swept Asian lows. We pushed higher. We came and reacted off of fair value gap. Here, we're sweeping Asian lows and we're reacting off of this fair value gap. This is actually a 30-minute fair value gap here, like the previous day was here. You guys can see right here, here's that gap. So as soon as the market rejected off that gap, I'm doing the same thing I was doing the previous day. I'm looking for my 5-minute gap. I'm not trading 1-minute gaps, guys. Those gaps are too aggressive for me. I'm gonna just delete this real quick. The 1-minute gaps are too aggressive, so I'm only doing 5-minute gaps, right? I'm making it a little bit more stable, especially for you guys out there that wants to kind of get into this. 1-minute gaps are way too aggressive, and a 1-minute gap is everywhere. So I'm basing it based off 5-minute minimum, all right? But simply put here, ooh, this is going way too fast. Let me slow that down for you guys. Simply put here, after rejecting off of this 30-minute, I'm looking for the market to create another gap. You can kind of see we filled this gap very early on. Now, personally, I didn't take this entry. Reason why, I was looking at NAS, I was looking at ES, I was looking at too many things at one point. I wasn't able to catch this first gap. I didn't take my entry off this first gap. So I actually waited for the market to create another gap here. Luckily, it did. You can kind of see we came lower anyways. Luckily, the market did create another gap for us right here. Boom. Here's that next gap right there. And you guys know what we're looking for here. We're looking for the market to reject off of this gap. Now, my stop loss on this day actually went underneath this low, and I'm going to explain to you why. This is the last candle of that gap, and if this low was broken, this market is coming lower because of this gap right here that we've mitigated. This mitigation is holding these current buyers in this market. This area is what's holding that. If this low gets broken, I know this market is falling a lot more lower, probably down to fill up all of this imbalance that we created the previous day, right? So let's play this a little bit here on the 5-minute. See, the market is rejecting off the gap. right here. You guys already know what I'm looking for. After that rejection, we're looking for this market to break this high. All right. So boom, the market's still rejecting here. The market finally starts pushing higher, right? Trade goes right here. Stop loss goes underneath these lows, and we're targeting all of these highs up here, right? We got a 1-to-1 over here. That's where we go break even, guys. Another reason why we're so aggressive is at a 1-to-1, we're going break even. So our 1-to-2 is a little bit higher up here, and the rest is history. Look at those impulses, guys. Look at those impulses. Look at those impulses. Look at that drive, right? That just shows you that there were real players right here in this market that was driving this market higher. Okay, so that's going to be the last trend I'm going to break down for you guys today. If you guys want to see more videos like this where I'm breaking down these trades and I'm explaining and I'm just talking about, you know, my mindset and why I was looking for, like the video, let me know, comment down and tell me you want more videos like this where I'll just go down and break down. Now I'm going to make another video separately for Forex. Okay, Forex is a completely different strategy. I trade completely different on Forex. I'm trading supply and demand, so I'm not gonna merge those together, right? This is gonna be for indices, it's gonna be for futures. So the next video, we're gonna break down our Forex trades and what we were looking for on there, right? The wins and the losses that we took there. So this is pretty much it, guys. This is the video. Thank you guys for watching this video and being here and listen to me explain these trades. I will see you guys in the next one. Do not forget to follow me on Instagram and reach out to me there if you have any questions. Peace out.